Tammy Burkhart. We are talking about chapter 16. The title of the chapter is Job Order Costing. But I like to talk about this chapter as our journal entry chapter. So I did a little quick introduction on the types of journal entries that we would be doing for this chapter and showed you how to debit and credit for purchase of raw materials, putting our three different product costs into the work in process, and then also finished goods and selling those finished goods. Right now, rather than doing a homework problem for you, I thought I would do the end of the chapter problem. It's on page 815 for those of you that have the book. For those of you that don't have the book, it is the end of the chapter problem. I will also take a picture of the problem and post that as an attachment to this link, as well as post it on Blackboard, just so you can see the problem that I'm working through right now. So it's a problem that has to do with job order costing. Again, it's on page 18. I'm just going to read it for you right out of the book. It says, Wild Wing Entertainment, Inc. is a manufacturer that uses a job order cost system. The following data summarize the operations related to production for March for the first month of operations. It says in A, materials purchased on account, $15,500. So just like I taught you in the introduction video for chapter 16, we're going to purchase goods. It's going to be on account. So materials purchased on account. So for, let's see, they are just titling it A. I'm going to debit just materials, and I'm going to put it on account. And the amount was $15,500. I know in the video that I talked to you about before, I might have put either direct materials or raw materials. This book, the authors just uses the word materials. So just to help you with your homework in your module, your homework module, you're just going to use the word materials. So we're going to debit materials, purchase credit accounts payable, just like we learned in financial accounting, just purchasing goods on account. Moving on, B. B says, materials requisitioned and labor used. So in this case, they give us multiple jobs. In fact, they give us 6 different jobs and then for factory use. And so in this case, we're kind of doing what's called a compound journal entry. You'll remember that from financial accounting. We have a bunch of different information from different jobs going into the process. So it's basically telling us they're putting materials into the process, they're putting labor into the process, and they're putting factory overhead into the process. We're going to break that up into 3 different categories for the 3 different product costs. The only thing we're going to total is the job amount. So you'll see when you see the problem that there's multiple different jobs. I'm just going to total those. I am going to use the 3 journal entries. So first one, debit work in process. We're going to credit materials. And the work in process for materials is going to be a total of $11,390. And again, that's adding up all 6 of those jobs for the period of time. You'll notice that the textbook doesn't follow these words by the word these accounts, by the word inventory, but this is inventory. It's materials inventory, it's work in process inventory. But to simplify things, I'm just going to do what the homework module will give you, and these are the terms that they're using. All right, so that's going to be for our materials. Our next one is going to be a debit to work in process. And this is going to be for direct labor. So direct labor for all 6 of those jobs is going to be $7,000 total. And so what do we credit for work in process? They're using wages payable. I think that's what I used before. Wages payable, salaries payable. Wages is probably a better term than salaries. Salaries wouldn't technically be wrong. All right, so now we have 2 of our product costs, right? We have our materials and we have our labor. So we've got our materials here, this first one, and we have our labor here, the second one. And then for our third product cost, we're going to use that factory overhead. Now, for overhead, let's just quickly jump over here. I did the T account for factory overhead. So when you have applied factory overhead, you would credit the factory overhead, right? But when you have actual factory overhead, you want to debit the account factory overhead. And so in this case, we're not using applied just yet. It's going to come later. So we're going to use, this is actual factory overhead that's been used on these 6 jobs. And so we're going to debit, since it's actual factory overhead, we're actually going to debit factory overhead. And then we're going to credit kind of like two different accounts. We're going to credit materials for our indirect labor. And we're going to credit wages payable. Sorry, we're going to credit materials for our indirect materials, and we're going to credit wages payable for our indirect labor. So these are the 2 different indirect items that we use under factory overhead. So $450 and $650 respectively. And this total is going to be $1,100. I'm going to use that as a debit. So this factory overhead is for actual materials that were put into process and actual indirect labor that was put into process. We will have more factory overhead coming after this journal entry, but this is going to be actual factory overhead in terms of those indirect items. So this is actual factory overhead. So anytime you have an actual factory overhead, like the T account says, actual factory overhead you always debit. Applied factory overhead you always credit, and we'll get to applied in a little bit. All right, so let's move on to C. C says, factory overhead costs incurred on account $2,700. And so this, we're not exactly sure in this case what it is. In the future, you might have things like property taxes on the factory, depreciation on the factory, maintenance on the factory, utilities on the factory, that sort of thing. So all of those things would all be debited to actual factory overhead. You would debit factory overhead, and then you would credit some sort of payable account. In this case, in this particular problem, they've lumped everything together. That's fine. They've made it easy for us. So we're going to debit factory overhead, and we're going to credit accounts payable. For the $2,700 they told us. Okay? So they kind of lumped everything together, and that's why we're going to do it that way. Going through the problem. Here's another example of factory overhead. It says depreciation of machinery, $1,750. Okay, so we'll put it over here under D. So depreciation for machinery is also factory overhead. So we're going to debit factory overhead. And we're going to credit accumulated depreciation. Just like we would credit accumulated depreciation that you learned in like chapter 9 in financial accounting, or wherever you did your financial accounting, you learned that when you do depreciation, you would normally debit depreciation expense, credit accumulated depreciation. Well, because depreciation is treated a little bit differently, it's a non-cash item, we have to kind of separate it out. So I'm going to do accumulated depreciation, comma, and I believe this was factory equipment. Yep, machinery, comma, machinery. And I think it was $1,750. So we'll double check that. Yep, $1,750. All right, E, factory overhead is applied at a rate of 70% of direct labor costs. So now here we are, we're getting to the applied amount. So we have 1, 2, 3 examples, issuances of actual factory overhead. And now we're going to apply the factory overhead. Like I taught you in the lecture for chapter 16, when you apply factory overhead, here's when you debit work in process. And then you're going to credit for applied factory overhead, factory overhead. All right, so that's going to be the journal entry. Let's get to the dollar amount. It says factory overhead is applied at a rate of 70%. So they had total factory overhead of $7,000, right? Because it's applied based on direct labor. So if our direct labor was $7,000, we're doing 70% of $7,000. 70% of $7,000 is $4,900. That goes here. And I'm going to write that down here just in our notes. So it's 70% of direct labor, which was 7,000. So that equals 4,900. Okay, that's how we arrived at the 4,900. We took 70% of direct labor because that's what our applied direct labor was based on. Our direct labor, how much was it? We have it right here, the direct labor, right? Our labor was 7,000. We're going to take 70% of 7,000, and that equals 4,900. All right, moving on. We've got 3 more. The next problem is going to be F. F says jobs completed, numbers 100, 101, 102, and 104. So I put all of that information over here. I gave you an example of one of the jobs. This is job number 100. We had materials of $26.50, we had direct labor of $17.70, and we had applied factory overhead of $12.39. So the total for this one job, job number 100, is $5,659. So that's how we totaled that. So you can go back and total all of these the same way. You see I have the $5,659 here. And so I went through and I totaled all 4 of the jobs that were completed. Now remember, when we complete our jobs, we're moving from work in process to finished goods. So an F is going to be debited to finished goods and credit to work in process. And I'm going to use the total amount that I already totaled here, that $11,548. Okay, so I'm going to talk about that one more time. So here we are at the end of, in this case, I think it's the month of March. We're at the end of the month. We've journalized our purchase of goods, all of the goods and labor and factory overhead that we put into the process. We've journalized the actual factory overhead that we've used. We've also journalized the applied factory overhead that we've used. And now we're basically saying, these are the jobs, right? The guitars or whatever it is that they're creating, pieces of furniture, and these are done. So we're moving them from the work in process floor over to the finished goods inventory. They're now ready to sell. So what's the process of doing that journalized? It's just this right here. We're going to debit finished goods for the amount of the jobs that we're moving over, and we're going to credit work in process inventory. Why? Because they're no longer being worked on. They're done. They're finished. Okay? Last thing. Number G says jobs 100, 101, and 102 were shipped, and customers were billed 8,100, 3,800, and 3,500 respectively. So basically the first 3, 100, 101, 102, these 3 were sold. Okay? So those 3 were sold. They give us the total amount that they sold it for. I think it was 3 different numbers, 8,100, 3,800, and 3,500. So we're going to total that. We're going to assume that they were sold on account. So I'm actually going to come over here. Let's see what my eraser is. In G, I'm going to debit accounts receivable, credit sales revenue. I'm going to debit cost of goods sold. And I'm going to credit now finished goods. All right, so the 3 numbers of sales totaled 15,400. So I'm going to put that here, 15,400. And then the total of this total here is 9,698. Those are the ones that I sold. 9,698 were the three jobs that we sold. So that's going to be our cost of goods sold, 9,698, 9,698. All right, so we'll just review, and then we're all done. We've gone through the whole entire process. Okay, so we started with materials that we purchased, right? This is a new company. It said just starting out. They're started with 15,000 of materials. They then had their materials put into the process, right? Part of this. They had direct labor put into the process to whatever it is they're making. And then they had a series of factory overhead. You'll see here they had their indirect materials, their indirect labor. They had several other different miscellaneous factory overhead items. Could have been things like rent and utilities and taxes and things like that, maintenance. That's all here. They also had put into the factory overhead the depreciation for whatever machinery they were using. So those three things, all journal entries, were all actual factory overhead. And then here we have applied factory overhead. Applied factory overhead, you debit work in process. And then credit factory overhead, here's how we compute that. Once everything has been put into the process and jobs are completed, we transfer from work in process, so we credit to decrease this inventory, debit to increase this inventory, finished goods. And so we've moved everything into finished goods, and then now finally we've sold 3 of the 4 jobs that we completed. The sales amounts for those 3 were $15,400 in total, and the total cost of goods sold, you'll see here, is the $9,698 in total for cost of goods sold. I think that's it for this amount. Let me know if you have any questions. See you later.